the economy is in recession. Now, of course, this is nothing new. This should be obvious, but people have been in denial about the weakness in the economy. So all this weak economic data continues to come out. More and more of the recession deniers are going to have to throw in the towel and accept reality, including all of the recession deniers at the Federal Reserve. And given how weak the Q3 data already is, we don't have a lot of July data yet, but it's starting to come in, and what we've seen is pretty ugly. And it makes a lot of sense that the third quarter would be weaker than either of the first two, because interest rates are going to be a lot higher in the third quarter than they were back then. Next week, the Fed is set to raise interest rates 75 basis points. We're going to be up to 2.25 to 2.5. If we were in recession when interest rates were 0.5%, 1%, 1.5%, think about how much worse that recession is going to be when interest rates are higher. And by the way, interest rates aren't just going up in the United States, they're going up all over the world, including in Europe. Because on Thursday, the ECB did something that it hasn't done in 11 years. It hiked interest rates. And in fact, it hiked them by more than the market was expecting. The consensus was that the ECB was going to move by 25 basis points. Instead, it moved by 50 basis points, which means this is the first time in 11 years that interest rates have been above zero in the Eurozone. And this is just the first of many hikes to come. In fact, Lagarde indicated herself that this was just the beginning of the normalization process, that rates are going to be normalized in the Eurozone, and that means they're going much higher. Now, of course, the markets still haven't figured out what all this means, because I think to the extent that more investors are starting to move into the recession camp, all of those investors believe that the recession means the inflation problem is over. They expect a weakening economy to weaken inflation. After all, everybody believes that the reason we have all this inflation is because we have this overheated economy. Well, if the economy cools down to the point where it's in recession, well, they just assume that we're not going to have any more inflation. Well, they're wrong. Inflation is not about an overheated economy. In fact, the economy's been in recession all year, and we've had inflation. So the markets are correct to factor in a recession, but they are incorrect to factor in a drop in inflation. Inflation is going to get worse. Even if we have a few months where it gets better, it's only getting better before it gets much worse. See, again, the bond market is clueless because investors believe the beginning of recession means the end of inflation. They have no idea that inflation is going to kick into a much higher gear as a result of this recession, because the Fed is going to usher in massive monetary stimulus. We're going to get massive fiscal stimulus, and the US dollar is going to tank. And we have had the benefit of a strong dollar so far in this inflation cycle, which has helped to keep the inflation even lower than it otherwise would have been. Well, now we're going to see how much higher inflation gets when we go from having a strong dollar to having a weak dollar. Most people are still in the camp that a weak economy is bad for gold, because they think a weak economy means no more inflation, and so no reason to buy gold. So in most people's eyes, gold loses no matter what. If inflation is high, gold loses because the Fed keeps fighting it with high interest rates. And if inflation goes away, well, who needs gold? So gold loses in that scenario as well. What investors still don't understand is that this high inflation is only bearish for gold to the extent that the Fed is able to be successful in getting rid of inflation. The high interest rates have to be high enough to actually bring inflation back down to 2%. But if the Fed is unable to contain high inflation, if high inflation is here to stay, in fact, if high inflation gets worse, then that is bullish for gold. And anybody listening to this podcast should take advantage of the current exchange rate for the dollar, the weakness and low prices in precious metals mining stocks. before this revelation wakes up more investors who have been in a complete slumber, before they awaken to reality, you have this small window of opportunity now to really increase the size of your non-US dollar investments, particularly those related to gold and silver mining. I've been talking about that on this podcast recently. These are incredible prices, in my opinion, prices that we will likely never see again in our lifetime once this turns around. And before it happens, you want to load the boat.